Hey there, breadwinners! Welcome back to Daily Bread, the YouTube channel that serves you a slice of financial wisdom with a side of humor. Today, we're talking about the most epic bank failures in recent history, and answering the question that's been on everyone's lips: is my money safe? So, buckle up, and let's dive into this financial fiasco. In case you missed it, two of the largest bank failures in history happened this week: Silvergate and Silicon Valley Bank. These banking giants catered to the crypto and tech startup sectors, and their downfall has left everyone asking, is my money safe? To unravel this mess, let's first look at the catalyst: a good old-fashioned bank run. Too many people wanted their money back, and the banks simply couldn't cough up the cash. This illiquidity crisis spiraled into an insolvency crisis, forcing the banks to shut down. Now, we can't ignore Jim Kramer's hilarious take on these bank failures. His sound effects alone are enough to keep us entertained, but he also has a point: fear is in the air. And when fear takes hold, it spreads like wildfire, causing panic and uncertainty. So, with everyone's nerves on edge, it's time to ask, is your bank safe? In the midst of this chaos, the government announced a special bailout for the troubled banks. Some people cheered, while others jeered. So, what exactly went down? The U.S. Treasury stepped in to save not only Silicon Valley Bank but also Signature Bank, citing a systemic risk exception. This move was meant to prevent further panic and bank runs, but it also sparked a heated debate. Critics of the government's intervention argue that this bailout only benefits the wealthy, leaving the average Joe out in the cold. They point out that some executives and shareholders cashed out millions in shares just before the collapse, raising suspicions of unfair play. On the other hand, supporters of the government's actions claim this isn't a traditional bailout since it only applies to depositors, leaving executives and shareholders empty-handed. But with key players like Greg Becker, CEO of Silicon Valley Bank, selling $3.6 million worth of shares and pushing for deregulation, it's hard to ignore the smell of foul play. The recent bank failures have left us all wondering if our money is safe, and the government's intervention has stirred up a whirlwind of debate. The big question now is, should we reconsider where we stash our cash? Don't worry, breadwinners. We'll keep serving you the latest financial news with a side of laughter to keep things light. So, hit that subscribe button and turn on notifications to stay in the loop on all things finance.